Good afternoon. This is Ken Long from Tortoise Capital with a review of a series of intraday trading case studies using symbol XIV, the inverse VIX ETF. It's the inverse volatility. And so this is from July 31st, 2013. We're going to start off with a sideways quiet channel right from the opening with XIV in what I call a turbo trade. In other words, we had the previous day, XIV had closed very strongly, and we cashed a good intraday trade. And I elected to keep a piece of that as a core position as part of a swing trade we have on in XIV. And then if we see strength the next morning, then we add the turbo position back on, and then we trade it as a combination swing and intraday trade. So thus this is the turbo portion of that trade. And so the vertical blue line is the open on July 31st, and we're on 3-minute charts on this one. And so right from the beginning, we had a strong opening, and as the market left the floodplain, make the entry at 26.58 with a 10-cent stop. Get a little burst up, then it holds sideways here, finding support along the north edge of the river. And then we get an intraday low here, a higher low, the next higher low. Now as it takes off again, I'm really liking this position because it just made a new high of the day, took out the previous swing high. So I see this as a slightly rising channel, as you can tell by the shape and slope of the floodplain. The 10-period regression line and the 30-period regression line are both positive and sloping up. The VWAP is holding and moving up. The 90-period regression line is up. The 30-period Bollinger Band, or the middle of the river, is up. And we're starting to get some range expansion here. So at 26.70, we got about 1.5 hour in hand, maybe 1.25. And with momentum, and because XIV was so strong at the time, we'll go ahead and take the second position here, moving the stop up to break even on the first one. As soon as it takes off in here, I'm adjusting my stop up to reflect the north shore of the river. Now we're in the money. And then as soon as this big expansion bar kicks off, I make the move to lock in about 26.90, and decide I want to make sure that I keep that nice move on the first and second position. So we got our stop up here around 26.90, and about 2 minutes later, this rolled over and exited at 26.90, and then the combination of those two positions nets 5R in the first hour. So at the time that we get this breakout and move up, this is what my intraday trading stack looks like. The stack are the things that I'm interested in for a variety of reasons, and sorted by the percent change so far today. And everything in the green is positive for the day, everything red is negative. So the biggest winner at that moment for the day was XIV at and up almost 2% for the day. And then unsurprisingly, or not surprisingly, UVXY, the double VIX, is the lowest of the day. And what I do is I typically am looking for SPY, and then anything north of SPY is going to be additional goodness, additional momentum, because then there's buying pressure, not just from the market being up, but also from that sector or from that company also being up. And I like this picture here that IWM, the small caps, are better than the large caps. And then I noticed things like Johnson & Johnson and Hewlett-Packard, DuPont are all individual companies doing better than the market, so that would be a natural place to look. TNA is the triple leveraged Russell 2000. So this is generally an up day, and I feel like we did a good job of finding the strength leader for that day, and we're able to lock in 5R. So now the next trade that happens, this is the first trade here. where we had that nice strong move, and we end up getting out up here. We can already see the 10 period rolling over, and we anticipate that there's going to be a regression line crossover outside the river up here. So we take the exit at, we end up getting filled at 26.90 on that one. So now I'm restocking it. I want to see where is it going to find support. Now it seems to be finding support in here. I'm already liking this one because we have like a swing low, a higher low, but the third one didn't complete the pattern. In other words, it didn't take out this first reversal candle with a higher low, and instead it just sold off again. So now I get a swing low, another ribbon swing low. So in this area here, I'm re-entering at 26.85. It looks like it's finding support at the VWAP and the 30-period regression line, or 30-period moving average of middle of the river. I like that the 30 is still out of the river, that the 10 is finding support and rolling up. The 90 is still long and strong, and the VWAP is acting as support. So I don't mind this. I think of the 5R that we made in the morning on this one. 2R we put in the bank to feed the bulldog, and now I've got 3R of markets money to fund the next cycles that we have intraday. So I go ahead and enter this one at about 26.85. And my thinking is I'm going to watch it really close up here at 26.95 to 27. And this zone is where it failed the last time. So what I want to do is, on the hint of price improvement, I want to be in the position so that if it gets up here and doesn't hesitate, or hesitates briefly and then breaks through, my belief is that the next move is going to be very fast because it will have broken out to new territory. So I want to be in the position before that happens because I don't want to have to try and chase it and then get a bad fill. So we go ahead and re-enter here at 26.85. We get, in the great big scheme of things, we got a 5-cent improvement on our position, plus we were out of the market during this period of weakness. So I actually really like that re-entry at that moment. So now the rest of the story. This is that 5R trade from the morning. This was the re-entry at 26.85. We didn't get the follow-through I was hoping for. It rolled over, and as soon as it gets down here at the Bollinger Band mean, I'm not liking it anymore. This was a failure to follow through, so I don't want to stick around for the fail. And I can see that the 30-period regression line is getting ready to cross the Bollinger Band mean in the near term, so there's no edge for us in that trade. So I take this one off at 26.80, and we log a minus 0.5R trade. A few minutes later, we get in the blue circle, you see the 30-period regression line crossing the Bollinger Band mean. Have always taken that as an important sign of the end of the previous trend, whatever that was. In this case, it was up. You can see all the price and the regression lines are out of the river, clearly flowing up. And then it can't continue that pace, and then price decays and then crosses the river. And so when the 30 crosses the river, I take that as a sign of a potential downside move. It, in fact, decays from 26.80 all the way down to 26.60, where it comes out of the river and floodplain briefly. I was in the dentist's office this afternoon, so I may have, if I'd been there, I might have tried to play this one short on a breakdown out of sideways quiet channel. That would sort of be a natural play. Later in the day when I get back from the dentist, though, I'm noticing what we have is this long extended move, although no panic selling. This just looks like slow decay in the floodplain. And then we get some kind of spark around 2 p.m. and Central, and then we get this sharp move up. I enter when it crosses the VWAP because it's already across the Bollinger Band mean, and the VWAP looks like it's going to leave the river here shortly. This looks like a resumption of this first trend, and there was some increased activity across the market. So go ahead and get this at 26.76, spikes all the way up to 27.09. And then in the sell-off, back all the way down, we just decided to take it at 26.95 and are able to cash a 2R win there. Sharp volatility down, but unaccompanied by the ribbon. It finds support. We say, what the heck? We'll take it one more time because I got one low, a higher low, another higher high. We take this one at 26.93. and we're able to cash an R off of this little spike up, and am only carrying the overnight position as the core on this one, and so we were able to pick up a couple extra R just by being tactically aware and not sticking around and not being too greedy about this. But these are strictly money management exits on this one, that a bird in the hand is definitely worth two in the bush when we're talking this late in the day. So that's a quick look at a series of XIV case studies today from July 31st, 2013. Thanks for your kind attention. Keep your powder dry and your wrist measured.